let's talk more broadly about the markets right now. We're joined by Stephen Dover. He's Chief Market Strategist at Franklin Templeton. He's also the head of Franklin Templeton's Investment Institute. Stephen, thank you for being here. We've been talking a lot today also about the hearings that went on yesterday surrounding the whole GameStop situation. And I want to ask you and take a step back for a moment, because so many retail investors have become so interested in this market, a combination of rising prices, stimulus checks, people maybe working at home with more time to trade. But when it comes to participation in this market and getting into this market, is it too late for investors to get in here after this monster rally that we've already had?
That's a fantastic question, and probably the question we're asked the most. And certainly there are a lot of people who thought the market was overvalued, have some cash on the sidelines, and are wondering what to do. And we've had a big discussion. In fact, we had a big strategic discussion on this yesterday. And our answer is yes, you should actually enter the market at this time. We're positive on the market over the next, certainly through this year, but over the next few years. And I think that there's just not enough opportunity in cash. So entering the markets would be both the equity markets and the fixed income markets, with an overweight to the equity markets.
You know, and Stephen, as you guys think about, your work at Franklin Templeton and think about engaging different types of investors, what is it like engaging, institutions now, retail now? How has that game kind of changed? Because it does seem, as we sort of heard yesterday, that individuals have never been more sophisticated. They've never had more information. How are you guys thinking about those dynamics?
Well, that's great. A great question. And I think the big change in the way that we see it is the entire investment world is becoming more institutionalized, if you will. And big financial managers like us have to treat all investors as if they're institutions, and with the sophistication of institutions and looking at them in the long term. So that means institutions now are looking at higher quality investment processes. They're looking at ESG, real meaningful ESG, and they're looking at more sophisticated ways of delivering products. So that's true in the retail, and that's true in the institutional areas as well.
Stephen, I just want to mention some data that we just got out a few minutes ago. The PMI, the market PMI data on manufacturing, which showed a reading in January of 58.8. That's the fastest growth for almost 6 years, and the highest growth in prices, the fastest growth in prices going back to 2009. And this obviously speaks to the issues that we've been talking about in terms of input cost rising. Will we see potential feed through to inflation? How are you thinking about inflation now? And are we going to see the Fed's hand being forced a little bit more at some point?
PMIs were strong. If you look at other countries, Japan and Europe, also strong. Services, not so strong. But as soon as we come out of the pandemic, I think services will have a huge rebound. We had very good news this morning from Pfizer about only needing one vaccination, and also that you don't need the deep cold refrigeration. That means vaccinations could move quicker. So we have some pent-up demand, and that pent-up demand is very likely to result in inflation. You've just had this infrastructure week. What a perfect week for you to have that infrastructure week, as we see the deep need for new infrastructure with the big winter freezes in Texas and the South. And as you just had all your guests show, commodity prices are up, and infrastructure will also lead to inflation. So we're going to see inflation. I think the question that we have internally is whether that's a cyclical thing, that's just an inflation coming out of this pandemic, which the markets can handle and is expected, or whether it's going to be an endemic inflation where we see persistent inflation for a period of time. The Fed wants inflation. Fiscal spending is supportive of inflation, so we're likely to have low levels of inflation going forward.
Stephen, what's your probability for a correction in March?
I think the probability is very, very low for a correction. There's a lot of money on the sidelines, and lots of stimulus, more positive news on the vaccinations. So I think it's unlikely to have a correction. As you know, you have a lot of guests, and it's almost impossible to actually predict a correction. It wouldn't be unlikely that we have some pullback in some stocks in the next few months, but that is not our prediction. Going forward, we see the markets being very positive.
Stephen, thanks for being with us today. Appreciate it. Stephen Dover is Chief Market Strategist at Franklin Templeton.